Hi believers, this is Amit from Waya team, and I'm here to provide a weekly bite and the road ahead in the markets. The big event of this week was the union budget. Let me first quickly discuss pros and cons of the budget pertaining to stock market. While the capex of rupees 11.1 trillion has kept unchanged from the interim budget at 4.5% of GDP, total capex growth has been a healthy 16% year on year. This is very good allocation by the government and shall have a multiplier effect on sectors like capital goods, industrials, infra, cement, and railways. It is clear that India is trying to prepare itself for the future. The modified program for development of semiconductors and display manufacturing ecosystem in India alone has seen its allocation go up from rupees 15 billion in FY24 to rupees 69 billion in FY25. This shows India's commitment to expanding the value chain in the space. This semiconductor space is heating up and shall perform very well going ahead, and investors should keep a close watch on few stocks like Hitachi Energy, Apar Industries, and CG Power, to name a few. Similarly, rupees 100 billion allocation for employment scheme is a step in the right direction to address the country's employment problem. For India to grow continuously at 8%, focus on employment is a must. We will see our demographic dividend only if we generate jobs. So in short, the budget focuses on infrastructure, job creation, and rural sector. The government cut the fiscal deficit target to 4.9% of the GDP for financial year 24-25 from 5.1% in the interim budget. It is clear signal to rating agencies by the government to upgrade India's rating to attract outside money. Now coming to not so good part of the budget. The budget increased tax on long-term capital gain on all financial and non-financial assets to 12.5% from 10%. Assets held over a year are considered long-term. Short-term capital gains will now be taxed at 20% instead of 15%. The budget has also increased the security transaction tax (STT) on derivatives trading. This was widely expected as SEBI continuously raised red flags about rising speculation in futures and options segment. Remember, FNO is good only when done with proper strategies and risk management. Random buying and selling of futures and options may land up investors in big losses, which is what our government is worried about. At Waya, we always try to promote healthy long-term investment habits through stock calls, and in FNO segment, we provide strategies with proper risk management to make disciplined investments and profits. Clearly, the budget is good for the economy, and all the spending of the government is well planned. A rise in taxes for the investor community is there, but higher tax collection is making the government capable of allocating resources in the right sector. Hence, we anticipate the market to quickly discount the budget and shift its focus to the trajectory of corporate earning growth, which has so far remained good for Q1 FY25. Coming to markets, Nifty 50 concluded the week with 1.24% increase, marking its 8th consecutive week of gains. This winning streak is the longest weekly streak since 2010 when the index achieved a similar run between February and April. The sharp market recovery post-budget was largely driven by significant participation from domestic institutions. Liquidity remains very strong. Mid-cap and small-cap indices saw recoveries as well. The mid-cap index ended the week up by 3.3%, while the small-cap index gained 2.48%. From a technical standpoint, we expect an upward trending activity to continue and the index should move towards the next psychological resistance of 25,000. Support for the Nifty is now seen as 24,650 and 24,450 levels. Let's discuss the interesting sector that we have been observing traction into from past couple weeks. This one is the pharma sector. The world's largest drug market, that is US, is facing decade-high drug shortage. One of the key reasons behind the drug shortage is a lack of consistent supply, spurred by an increase in bankruptcy filing among the suppliers. Several supplier-side players have been eliminated from the US generic market, resulting in supply distortion, in turn leading to drug shortages. This is favorable tailwind for India Pharma, and Indian players are in strong position to take advantage of this. Exports of Indian bulk drugs increased 20% YoY during first quarter current year FY24. This reflects the growing demand from the US for Indian bulk drugs. Most companies which have declared FY24 results showing a strong double-digit growth in revenues from the US. We expect pharma companies to sustain their revenue improvement trend in FY25. Keep a watch on stocks like Sun Pharma, Lupin, Cipla in large caps, and Strides Pharma and Marksans Pharma in mid-cap segments. Concluding our analysis, budget volatility is out of the way and the market now focuses on earnings. Valuations are high as one should try to enter stocks on corrective days only. With the current momentum, Nifty can show 25,250 levels easily. Coming to Waya's multi-bagger update, our previous multi-bagger in the waste management and recycling sector is up by 80% in just 27 days. That was a bullseye call. We will be releasing an interesting potential multi-bagger pick from the wind energy segment tomorrow at pre-market opening. Make sure to buy it in our recommended range. That's all for today. Wishing you a happy trading week ahead. Good night.